Energy is one of Europe's largest independent oil and gas exploration and production companies. Their business is divided into two key units, one focused on developing the Rajasthan resource base in India, the other on exploring frontier bases in Greenland. The company made a profit of $1.1 billion in the year 2009. We believe cairn Energy follows two main models of management, the open systems model and the rational goal model. As previously explained, the company clearly demonstrates goal clarity, which is the main quality of the rational goal model. The timeline of 20 years of growth shows cairn Energy's distinct innovation and major growth, which is the quality of the open systems model.
However, despite such positive management and the safety procedures that cairn undertake, such as the extensive surveys and the state of the drills, the fact still remains that in the past few decades, global demand for energy has increased as a result of the Industrial Revolution, continuous industrial development and population growth. Therefore, the supply of fossil fuel energy is far less than the actual demand, due to the location of the remaining fossil fuels, the majority of which are now located hundreds of meters below sea level. The technological demand for equipment to locate and drill marine oil wells is an economic burden and can sometimes result in disaster, such as the 2010 Mexico oil spill.
Having carried out a Porter's analysis, these are our findings. We believe the threat of substitutes is the issue of renewable energy, while potential entrants and industry competitors are the following companies: Rockhopper Exploration plc, JFX Oil and Gas plc, Sound Oil plc, Oil India Limited, Hindustan Oil Exploration Company Limited, and the Hong Kong and China Gas Company Limited. A major political factor is the pressure cairn Energy face from environmental groups. Such groups, such as Greenpeace, have placed pressure on the government to stop companies' underwater drilling, and consequently this will have a major impact on cairn Energy.
The invention of sophisticated technology has made cairn energy production safer and cheaper. New technology has been developed to monitor the pressure of oil passing through oil pipes and also the corrosive state of the pipe to prevent future leakage, such as the Atlantic BP oil disaster. The strengths of cairn Energy are their good track record of oil finds and squeaky clean reputation in terms of the safety on the underwater drilling front. The obvious weakness is the fact the company will be disbanded in the next 50 years if it does not change its outlook into more renewable energy sources. The company also loans a staggering amount of money off the American government every year for exploration, quite risky in the fact that in 2009 the company made a loss of $61 million. Obvious opportunities clearly lie with the Greenlandic government inviting cairn Energy to explore a set area in Greenland, along with 9 other major oil companies such as BP. These pods are expected to be the largest left in the world, which could lead to staggering profits, for cairn technology has the ability to extract up to 120,000 barrels of oil a day. Also, by attempting to sell the majority shareholder in the Rajasthan oil production, they will create capital to invest in the current and potentially more profitable Greenlandic exploration. By doing this, there is no need for such extravagant loans off the American government. The other option is to use the money to invest in more up-to-date technology to be able to comply with their company slogan. There are many threats to cairn Energy, the most obvious being major competitors such as Shell and British Power in the exploration of Greenland. If the company are unable to strike a profitable oil well, then the loan will add up and the value of the company will fall. Shareholders will sell their shares and the company will be deemed worthless. However, this is set to be the case in 50 years' time if things do not change. We recommend to sell a minority share within the Rajasthan business to hold control, which will mean more power, but in return will keep faith within the company whilst the exploration in Greenland is ongoing. Then, when oil is found, share prices in the company will rise and be more profitable for both the bank and the profile and reputation of the company.
With money gained from the sale of the 49% share in Rajasthan, rather than plough it all into further exploration, expand the company and find investors to back research and production for equipment, that is, to generate renewable energy.
Raise awareness of the company by perhaps going into the public sectors with sales, rather than dealing with just business to business.